Hello, traders. Hello, warriors. Fed day. So, as you can tell by if you look at the screen, very slow molasses type movement. You almost have to make an appointment to get a trade off here. A couple of pieces of the news that's supporting equities today is Evergrande made a payment. I believe the House of Representatives also eliminated the debt ceiling. Not sure if that still has to go through the Senate. And maybe we'll get the trifecta with Paul later on. I don't think anyone's expecting, with what's happened in the market the past couple of days, for us to for Paul to taper, announce a taper, start a taper. You know, he has plenty of opportunities to do it, because when you look at the U.S. housing market, the Fed is buying 40 billion of mortgage-backed securities. I'm not sure if the duration and if they do it every day, every week, but certainly with the housing shortage in the US, the housing market doesn't need any more support from the Fed in buying mortgage-backed securities. So, plus some of the bottlenecks that have caused prices to jump because of supply chain issues. So, let's just keep this in mind before we get to this. It's my belief that if there is a rally in S&Ps, that if we rallied back up to 44.20, you're still over 130 pips away from the high. You get some type of ABC up into resistance, that would be a sell for me. Similarly in NASDAQ, that's going to come in up around 15.3. All you do is you look for equality off this wave that we had that began Monday late session. We began to recover from the big sell-off. We're about we could rally back 50% or so. So keep an eye on this. I'm a seller if the market likes it. So the trifecta would be a dovish Fed. Okay, a dovish Fed on top of what we have already. I'm still bearish. It's my contention that this low that we put in here on Monday is not going to hold. And in the S&P, same thing. I think a natural place for the market to go would be to the 200-day moving average around 41.20. And we were talking about the 2-week reversal up here. I taught you about the 2-week reversal. This was the week right here at 45.11, closing at 45.11, and it closed well beneath it, and we're getting some decent follow through. Now the recovery is making this candlestick, weekly candlestick, look okay. So really next couple of days are pretty important. A Friday close is going to be pretty important. I also want to talk about what I would do if we had some dollar strength. So Aussie, had about 20 pips made from Sunday night. Similar situation in euro, not much, 30 pips from the buy Sunday night against this line. Looks like it could go either way. So I would love to have an opportunity to buy even a new low. We did diverge here, but a new low is not that far away. We're talking about 1690, about 30 pips on central bank announcement. That should be no problem. Also favor buying a dip in Aussie as well. You could tell we're really diverging here as well. And then I need the high that we made on Monday, and I did say so. The dollar was good for something for 30, 40 pips. But you see this RSI right here? Okay, so on multiple time frames, you have confirmed highs. That's a 2-hour. Here's a 4-hour. So if we got a rally above this high into the Fed, I'm going to be looking to fade it, because when I look at it longer term, unless we're just going to blow through these highs here, we could be setting up a failing rally off this break. It's quite a dramatic rally, but we could be setting that up to where we finally get a decline in the dollar. So looking to fade the dollar if it takes out this high, because if we take out the high that we made Monday, the 4-hour RSI is going to stay under 70. The 2 hour most likely will stay under 70, and we'll have a divergence to work with. Looking at the gold, I talked about early in the week that we had the potential right shoulder developing. It's in gear. So if you bought it, in front of the Fed, you have some, about $30 made. Take a piece and put BE stops in here. We start breaking out over 1832. There are big numbers coming. So far, we're failing at resistance at prior lows here. But if I'm right about the dollar weakening, I'd be open to buying a break in the gold. Maybe back halfway, called the $17.40 rally. So 25 back, right around here, around 1750, and risk the lows. So maybe we get a pullback in gold to buy into. Silver has had 2 days in a row where it's acting stronger than gold, but I keep looking at the RSI on multiple time frames, and markets usually don't bottom with the RSI under 30. There's a 24 reading there, and we had a confirmed low here, right? So if we made a new low in silver, I still prefer the long in gold, because I still think that the gold silver ratio, although it's down hard today, looks like it could just be consolidating for another wave up. So my preferred long, if both silver and gold sell off, is going to be in the gold market. Some type of fib retracement here. Look at the 1 hour. Okay, so here we had 41 and 81, exactly $40. So 24 back, 1757, 61.8, around down here in the 1750 range, risking the low the move just in case we get a sell-off in the metals and a rally in the dollar, and then look to fade that. Again, S&Ps, maybe they're not going to get up here. I'm already short from near the highs. If you've been following my interviews, although I would have preferred to have been, my trade selection wasn't great. Maybe it'll turn out that way, but I look at this NASDAQ now, and if we fail here, see this blue line? I know it seems like a very aggressive narrative, 11,000 in NASDAQ. You're talking about 4,000 NASDAQ points to a target. And right now, this is really an important point in NASDAQ. We're still pretty far away from here, but if you look at this, this was a megaphone line, wedge line, plus this is the wedge line right here. Let me break out my telescope and give you a weekly. So here's the wedge line that I'm anchoring this formation over, and this was the megaphone line that we had a throw over under over, and it's been working for about 2 months, and we have confluence with the wedge line and the megaphone line at about 14.5. So under 14.5, which is still 500 points away from where we are right now, would be a very negative signal. We already have a couple weekly reversals. The only thing that makes me uncomfortable about top picking here is I have an awful lot of company, including Michael Venezia's idol, Jim Cramer. So I'm rarely on the same. I know Mike respects him, but Cramer's been talking about, I forgot who told him to avoid being long the market into October, the seasonally weak. Oh, I know who it was. It was Larry Williams. So he spoke to Larry Williams, and so far Larry was right. In fact, Larry said down here that he was buying stocks near the post the pandemic lows after the COVID crash. So he's been around for a long time. He wrote a book, I believe, How I Turned $10,000 into $1 million. I have a different book title, How I Turned $10,000 into Multiple Months of Aggravation. So if you want to read my book, you could just go to Amazon anytime. You could, the shirt I'm wearing, guys, it's looks like a flag. It's America in Distress. I know I'm not supposed to be political, but you know, it's my show. I saw an interesting tweet the other day, and it said that we're being punished for electing President Trump with Joe Biden. So our punishment for having elected Donald Trump is Joe Biden. So he's got an awful lot on his plate. You know, next couple days, this uh, what is it, infrastructure that was voted on, passed by the Senate. His own party is saying they're not going to go for it, and that's a promise a bigger package of 3.5, mainly social engineering, not much about infrastructure in there. So we have our ideas, what we're going to do after the Fed. I'm not putting anything on here now. I'm going to see what type of reaction we get. You know, I've showed you how bearish I am in the stock market. This looks like, you know, a little triangle. We don't have to rally up here. Also, take a look at this low. And this is why I don't think it was really just, you know, the Monday's lows are going to hold for a rally to new highs. Is it was crushed. The momentum reading was 14. Markets can bounce from this type of extreme downside momentum, but normally it takes a couple more trips down to new lows for the market to start not confirming the low. So this is a confirmed low. Markets rarely bottom. You could get a bottom, but not the bottom with confirmed lows or confirmed highs. You usually don't get tops. So we have a couple of things to look at here where this is not the low based on my RSI work in the S&Ps. What to do with yields? You know, sideways. I was talking to a friend of mine, and you know, if you've had some difficulty trading the yen, there's no doubt why, because you could go all the way back to April, and we've been in pretty much a 200 pip range. So the question is, are we going to take out 108, or we can drive up for a third drive to one more high, and yields finally close over 136 instead of just being up there for a day? Kind of reminds me of the VIX. You know, the VIX did this too, you know, a few times. It rallied up, broke out, and failed. VIX so far is holding this daily trend line break. We'll see what happens with the Fed. Expect everything and anything from the Fed in the coming hours. It's almost time to start paying attention to the grains as we head into harvest, and just taking a look at the corn. We've had a very nice correction. I'm looking to buy it, not quite here. You know, we're not diverging on the daily. The wheat's not making new lows. It's putting in a higher low. So wheat actually has the best technical structure of all the grains. And the beans are trying to turn. We'll see if they could get back above this breakdown that really there's been very little follow through. And I still think that we could work lower, maybe down towards this $12 level, 1180 level. So, you know, you're going to have to start keeping an eye on the grains. Here we go with the Russell. Just want to show this. Russell kind of reminds me of the yen, right? Look at this. It's been in this range, hasn't made a new high since last spring, and hasn't broken down. But if we're going to get a break, this may hold up better because it doesn't have as much to give back. But I still am anticipating a breakdown in Russell once we close back under this 209 level. It may not be. Maybe some people are going to start to rotate into things that are you know, not overvalued, and most of the Russell is down huge, you know, 30-40%, a lot of the individual issues. So this may be where people start to rotate in on a correction in the stock market instead of buying FANG stocks. Just want to show you something. I hope you guys made some money in Apple puts, because I talked about it near the top. here was the daily, here was the wedge up here, 58. And now we're trading down here at 44. But what's interesting about Apple, and maybe it's a harbinger, is after the breakdown of the wedge, get rid of this, we left a gap Monday. And if it leaves its gap, I'm going to be able to label it a breakaway gap, which is a very bearish development. I was looking for 130 or so on the first break, but if you really want to know where it could go to, you look at where I anchored the wedge, and the wedge is anchored all the way down here at the COVID low. I don't know why 80 is impossible. 200 week moving average up here, especially once we pierce this 130. But keep an eye on Apple, and if it can't fill the gap, you have a breakaway gap, and this is a lot of market cap. And I did talk about it up here. I talked about it before it got there. I showed the weekly and said, if you ever want to look at a cleaner 3-drive formation, take a picture of the end. So I'm going to leave you on that bearish note. I want to wish everyone success. Don't try and anticipate what the Fed announces, and then have patience, wait for the press conference, and have all your technical areas ready, or at least some ideas of what you're looking to do after the market reacts from the press conference. And you know what? If you don't get anything off, all you have to do is let the dust settle for a couple of days, and the boys, if they want to sell something, will bring it back so they could sell it. And if they want to buy something, they'll take it down so they could buy it. So you're going to have another opportunity if you miss whatever happens today. And that goes for every day, not just Fed days, not just NFP days. Really take the pressure off and say, I'm going to miss things all the time, every day. And that's okay, because there's always another trade around the corner. So with that being said, everyone out here, if you're in the markets, that means you have money, and that means that you're fortunate, and that means that you're blessed. So don't just count your pips and your coins and your crypto, count your blessings. And I'll be back with you tomorrow to update the Fed action. Let's see if fading dollar strength and buying a break in gold works after the Fed. And I also want to remind everyone that in an hour and 15 minutes, I believe, Michael Venezia will be with you. I believe it's 11:30. Diego, can you Skype that in for Mike's show, 11 a.m. Eastern time? Okay, thank you very much. So that's a little over an hour. And I recommend you listen to Mike. I know he's going to have some ideas going into the Fed, and he's one of the best stock selectors I know. So that's a wrap for us today. I'll see everyone tomorrow. Good hunting, and I hope this is adding value to what you're trying to accomplish as a trader. It's not easy, but it's our mission to build up traders and edify them every day. If you like what you see, hit the thumbs up. And this is Dale Pinkert saying good hunting, and I'll see you tomorrow. And remember, live to trade another day. Adios.